Let's begin with lowering interest rates. On the surface, it's really no surprise that Trump has been pushing for lower interest rates the moment he came into office, and really throughout the entire time, his biggest hurdle has been none other than Jerome Powell, the head of the Federal Reserve. Now, even though Jerome Powell doesn't unilaterally set interest rates himself, he does oversee a committee of 12 people who decide together, and this is where Trump has decided to push. In fact, Trump recently argued that rates should be lowered all the way down to 1%, which would spark a brand new wave of spending, borrowing, and growth. Although Jerome Powell doesn't agree, and that's caused a lot of tension. So much so that Trump has even floated the idea of getting Jerome Powell fired. As of last week, Jerome Powell said that the DOJ served the Federal Reserve with grand jury subpoenas and threatened a criminal indictment tied to the multi-year renovation of a historic office building, which Jerome Powell claims is a politically motivated attack designed to pressure them into lowering interest rates more than they would otherwise. This also coincides with the firing of Lisa Cook, who Trump removed for alleged mortgage fraud. This is why it's a lot more than just Trump versus Powell drama. Not to mention, when a standing president pushes on the Federal Reserve to bend at his will, it creates the illusion that the Federal Reserve is no longer independent, and long-term, it damages the central bank's credibility around the world, leading to a potential sell-off of US dollars. Either way, Jerome Powell's current term comes to an end in May of 2026, and after that, we're likely going to see some pretty significant changes across everything, including first, the stock market. As of now, there's a lot of skepticism about where the market's currently headed. I mean, it's no surprise, over the last 5 years, the market has done incredibly well. But going forward, some analysts are getting a lot more cautious. For example, Bank of America predicts that the S&P 500 is going to reach 7,100 by the end of 2026, implying just a 3.7% increase from today, even though Deutsche Bank is still predicting a nearly 17% gain. However, it is worth mentioning that so far, not a single analyst has predicted that the market would end the year negative. And the last